nine, eight, seven, six, five, four, three, two, one.
Hello, everybody. My name is Jonathan Boyarsky, and I'm a venture fellow here at Newchip Accelerator, which is a completely online, worldwide accelerator that helps pre-seed, seed, and Series A company really get going and puts them in front of investors. I'm joined today by three wonderful guests, and we're going to be talking about impact investing and the industry and what it looks like. And so I'm going to go ahead and introduce everybody now. We're going to start with Joshua Abalos, who is a strategic angel investor and an employee at the Halo app, which is a peer-to-peer lending to help usurp predatory loans and payday lending to get in the way, to really get in the way of them. So Josh, why don't you tell us a little bit about, who you are, your background, and what you're doing here?
Absolutely. My name is Joshua Abalos. Thank you for the introduction. I am a strategic angel investor, as Jonathan said. I have two portfolio companies now, and my primary investment strategy is to invest in entrepreneurs who turn their struggle into brilliance. There are a lot of problems that individuals from urban communities deal with, and those who are solving those problems today are those who are most interested in spending time with. Two in particular, one called the Halo app and one called DeliverEnd. The Halo app's a private peer lending community for loans up to $1,000. I love the Halo app because I'm personally passionate about solving financial equality for many reasons. But more importantly, because my mom struggled with finances a lot when I was a kid. It was just a reality for us. My dad was in and out of jail. He struggled with alcoholism. Typically, a lot of people in urban communities who are struggling financially, their families struggle with alcoholism, whether it's a mom, a dad, a brother. That's just how people deal with their stress, unfortunately. For those reasons, my mom was left with a single income and had 6 kids to support. And this is why the Halo app is something that I truly believe in, because it provides financial equality, allows people access to capital. When it's all said and done, I believe in investing in entrepreneurs who are Black and brown. I was raised Chicano Latino here, like I said, out in Denver, Colorado. Green chili, smothered burritos. My dad hustled burritos every chance he got, whether it be at a Rockies game, whether it be at a Broncos game. This is where I would learn entrepreneurism. The fact is, the lack of resources has really held my family back. Specifically financial resources. And this is why I feel passionate about providing this to the masses. Because if we can, create a shared economy where we borrow and lend amongst each other and eliminate this, inequality in credit score, then we can really flip the economy on its head, right? And allow these people who are hanging out in the lower to middle class to start to thrive and understand financial equality from an entirely different perspective.
Yeah, thanks for sharing, Josh. I mean, I know your story is kind of right in line with the Halo app and what you're working on, and it is funny the different ways we can help people. It really varies, but that is one that I think is often untouched from a private sector position. There are organizations like the Consumer Financial Protection Bureau, which has kind of stepped in to help, but seeing private solutions in those industries is really exciting because they really do need to be turned on their head, because they right now are just in a place that is predatory and really just vile in the way that they do it. But thanks for sharing, and we're happy to have you on the panel.
Appreciate you. Thank you.
Next I'm going to go to Jessica Karr, who is a principal at UMANA, which is a VC that focuses on impact investing, and they have a number of kind of specialized and focused funds there. But Jessica, tell us about what you're working on and how you got involved.
Sure. I can explain UMANA first and then sort of my path there. So UMANA is actually structured as a multifamily office, and we take clients who are focused on impact. So the first client technically was Ryan Bethencourt, who is a biochemist and now the CEO of Wild Earth Dog Food. So it's like vegan dog food. And him and Ba co-founded Ba Bell Ventures, which was the first fund that Ba was the GP, and Ba is the founder and CEO of UMANA. And now we have a couple other select clients, and underneath their wealth management strategy, it focuses on venture capital And we strategize basically what type of impact our clients want to make. And then we structure the whole venture capital fund around that. And we can do angel investing in SPVs as well. And another example of a fund that we're active with right now is Do Contra, which is Adrian Gurner's fund. And under the impact that strategy that we created, we do focus on sustainability because he's been an activist about the ocean for a while, but he's also really passionate about social issues as well, like equality, and he's also really into health. So we're looking at a lot of plant-based companies, which is also my background. I was at Impossible Foods for 6 years as an early employee, kind of through the initial prototypes up through public launch. I was a biochemist and just transitioned out of Impossible when they started focusing on scaling up, and I really liked the innovation phase, and I was really interested in investing so I could sort of like have a great impact and touch a lot of different companies at once through that. And yeah, before that, I'm originally from Texas, actually. So it was kind of, I'm from like where they have a lot of cows. And so it's kind of ironic that I went into plant-based, but I definitely think that that gives me like a perspective of just kind of like all different types of people outside of like Silicon Valley bubble.
Yeah, and I think that, Jessica, one of your best perspectives is the number of companies you see. Just you've seen so many, so we're really excited to have you on the panel and kind of give that perspective from, you know, what are investors thinking about, how do they approach impact investing, and what can companies do to really kind of get you over the edge into that yes category. But thanks for joining us, and we're really excited to have you. Lastly, we're joined by John Winslow, who's the founder of One for One Water. John, why don't you tell us about, you know, your story and how you started this company and sort of where it's at and what you're doing.
Sure, absolutely. Well, my background is a little bit different. I was actually a firefighter in Naples for almost 20 years. And the way the fire service works, you work one day on and then have 2 days off. So I always had a second job on my days off. And my primary thing that I did was air conditioning. So that's where my business background comes from being an operations manager in a couple of decent sized businesses here in Florida. Air conditioning is a great trade to have as a backup plan in Florida. You can always find work in Florida as an air conditioning guy. Probably the whole part of this though starts like in 2006, I heard about Tom's Shoes. It was the first kind of mission driven, where the mission was the core of the company that I had ever heard of. And I immediately fell in love with that concept and have wanted to do something like that ever since then. And it's probably been about 2 years ago now. I was driving down the road and I was drinking a bottle of water, and I thought, you know, if Tom's Shoes can give away a pair of shoes and Bombas can do socks and Warby Parker can do glasses, why hasn't somebody done it with water yet? And I immediately thought, well, if it was a good idea, somebody smarter than me would have done it already. And so I started contacting bottlers and co-packers, distributors, retailers. And my intention or my thought was that I was going to prove to myself that it was a bad idea and that I'd be able to get some sleep. And in the process, I just fell more and more in love with the concept, and the numbers worked. And I did everything that I could to make sure that One for One Water had legs to stand on. So we source some of the world's best tasting naturally alkaline spring water. The packaging, this bottle is both recyclable and biodegradable. This will biodegrade in a landfill in 4 years. Normal plastic takes 450 years. We're competitive on the shelf with products like Smart Water or Evian, the other premium waters. And then what we do is we launched in November of last year, and we funded a well in Bihanga, Uganda. So that well costs $10,000 to fund, and it produces 5,000 liters of water a day. There are 545 people in Bihanga that have clean water for the rest of their lives. So when you take that math and do it over a period of year, the cost per liter is less than 1/2 cent per liter. So we actually take 5 cents for every bottle that we sell and set that aside to fund wells and clean water projects. So we're called One for One, but we're actually 10 for 1. It's really important that we always underpromise and overdeliver when it comes to the mission that we're serving, because it's so much bigger than me or even this business. So that's the broad strokes of who we are and what we do.
Yeah, that's awesome. And one of the things that really made me super interested in what you're doing is, I think oftentimes in impact companies, it's usually a trade-off. Like, we either get, some sort of sustainable food source, but it might be at the expense of having to spend a lot of money or being really expensive or some other trade-off. And for yours, I was like, oh man, well, they're selling water in plastic water bottles. I was like, oh, well, if you care about the environment, maybe, getting water to people is obviously a very high priority. Mm-hmm. But if you're really environmentally conscious, you don't want to sort of sacrifice that. That's why when I heard that your bottle is biodegradable and, it takes 4 years to kind of break down, I was like, well, now we don't have to sacrifice. And so I think that wherever there are companies like that, it's really attractive for both consumers and investors. But thanks for joining us. I'm really excited to have you.
Thank you. It's great to be here.
So I want to actually first talk about measuring impact. It's something that a lot of investors care about and a lot of companies care about, but it's something that can be tricky for some companies and some investors, because depending on what is important to you and what sort of your investment criteria are, it can vary. So let's just kind of dive into that, which is, how do you guys think about measuring impact from a quantitative and qualitative way? And how does it really influence the way that you build your company or make your investments? And let's start with Jessica, because I think the investor perspective is really interesting.
So when we first see a deal, we actually fill out, as Jonathan knows, we have a process called a deep dive. And it's a document that basically looks at every aspect of the company, and we actually have a section where we talk about measuring the impact. And it's interesting because a lot of times, investors only want to see the financials, but if you think about it as the triple bottom line, which includes environmental and social impact, that's how you start thinking about how to measure the impact. And a lot of times the companies are not reporting how they're going to measure the impact, because we're also like very early. We invest at early stages. So like a lot of times they don't really have a product out there. They're like, we want to implement that later. So we usually point out in the beginning, like, okay, you guys could measure. We analyze that for sure and like suggest that they track it. And then definitely one of our goals is to start reporting on this as well. But it definitely requires a lot of infrastructure to like work with the companies to make these measurements.
Yeah, and I think that you raise a good point, which is the importance of measuring impact is not only for investors, it's also for consumers, because consumers want to know what they're buying and the impact that it has. So how do you guys go about measuring what you're doing at the Halo app and sort of money saved and interest saved?
Number one is how often a borrower becomes a backer, right? So they were in need of a loan today, and tomorrow they are one of the individuals in the community who are now lending money, right? That is a KPI that we use every single day to really understand the amount of impact that we're having within our community alone. But then you look at payday loans, right? And there's an average of 420% that are charged by these cash advance locations or payday loans. And we can simply look at it and say, okay, well, if the average is 420%, how much money are we saving this particular community, right? Our go-to-market strategy is to partner with other communities, right? So it's really this fluidity that we really attempt our customers to engage in from an impact point of view, right? If they can hit all three of those throughout their life cycle as a customer of ours, we're really, really happy. And then we can really start to tell a more powerful story.
Yeah, and I think that's a good way of doing it. And I've always loved your guys' KPI of graduates, which are people who need the loan and now are lending, which is a really, really crazy place to be in a financial kind of position to say, okay, like, maybe 2 months ago I was desperately in need of $500, but now because that actually just was a tough spot, I can actually give back to the community. And I also love it. I also think that another KPI that's really valuable is percent of people that pay back, which I think that you can sort of show that your process of not really using a credit score, correct? You guys don't use classic credit score? You guys do interviews?
Yeah. So we really built our own proprietary score here. It's called the Halo score. But prior to even be given a Halo score, we really want to ensure that consumers participate in a human element, right? So they're going to spend time with what we call an opportunity rep here. They'll engage in a human-centric interview, right? Where we'll then send them a private link, welcome to the community. And that's really the first level of trust that we engage in, right? But if you remember, we partner with communities in order to promote our application. So if I hear about it from Newchip, I trust Newchip. That's a whole other layer of trust added. This allows for our community today to have a 92% payback rate, which is pretty awesome, right? We are an application based off trust, and we have many levels in which we build trust with consumers. But for those reasons, we're super proud of that payback rate, and we believe that by saying, hey, look, these people that you once said were high risk, when given a chance, when given a fair product, they're not nearly as high risk as what you once considered them. This idea of lending and borrowing isn't new. The Halo app is just a place where it can happen safely while feeling included and not being judged based off traditional credit.
Yeah, and I think that this is sort of where both you, Josh, and John kind of have these stories, which are, why doesn't this exist? Like, you're saying with Warby Parker and all these other places that do the buy one, give one. And, Josh, you're saying like, people do this in a community. They will lend to their neighbor and to their friends. And so it's kind of cool to see how we can sort of build infrastructure and companies around ideas that help, have helped in communities in the past, but really just expand that, because we live in a international globalized world that everyone's connected. So we might as well kind of use that interconnection to help those who might not otherwise have that opportunity. So that's awesome. And that kind of leads into, John, what you're working on. How do you guys go about quantifying your impact and trying to, increase that and getting the message out there so that consumers know about it as well?
Right. Well, that was the thing that I had this idea, and I realized that it was a good idea. And then I built out projections. I built out business models to see how everything was going to work. And before this, I knew about as much as the average person knows about the global water crisis. I knew that there were a lot of people that didn't have clean water, and that providing clean water for them would be a really good thing. But I didn't really understand all of the other impacts that well has, the time that it frees up and it makes healthy communities. And now the children can get educations, and now the mothers can work at home and lift their family out of poverty, and just all of those things. And then I looked at the fact that, in 2021, the bottled water market in the United States is projected to hit 25 billion in annual sales. When I looked at that and realized just how much bigger it was than just me, that was actually the point where I said, I have to do this. So, like I said earlier, we fund wells, and then when you project the cost of that well over 1 year, the cost to provide a liter of water is less than half a cent. And we give 5 cents for every liter of water that we sell. So we actually give 10 times what we promise. But the impact that well has in the community, it's one of those things. It's just like what Joshua was saying, that it takes a downward spiral and turns it into an upward spiral, because now the people in the community are healthy, and now they can work, and now they can get an education, and it changes the entire economy of that community. Mm-hmm. And it's just, this is the stuff that I've learned over the last year and a half while I was developing this business that made me say, okay, it's so much bigger of a picture than I was even aware of. The other thing that's really neat is, I visit sites that carry 1-for-1 water. We're in a ton of coffee shops and local grocers and things like that. And when you walk in, I've got my shameless promotion shirt on right now.
Yeah.
So when I walk in, it's amazing. Like, I literally get cheered when I walk in, and they're like, hey, it's the water guy. And everybody's so excited, and people connect with this on an emotional level like nothing I've ever seen before, because they know, like, I've got these are 2 boys in Bihanga that have clean water today because of this business. So it's just something that people can connect. And what's really neat, especially in everything that's going on in our society today, is this is something that everybody can put everything else aside and agree on this.
Your point about the sort of butterfly effect in terms of impact is a really good one, which is, well, what does, one small kind of act of kindness do? Well, it can do a lot. And I think it's funny because we talk about metrics and measuring it. And of course, we can measure impact, but sometimes we can't measure impact. And it's sort of this unknown. But I think that because we know that there's that potential, it's worth seeking out and trying to say, well, we did free up time, and now, or Josh, we freed up money so that people actually went and donated or had more time to take care of their kids or could take a day off of work they normally couldn't take off. So it's really interesting to see. And I think that John, kind of to your point, and this is kind of what I want to go back to Jessica on, which is I feel like some companies really struggle to get their message out there, that they are doing, a net positive. If I saw 1-for-1 water in a store, I probably wouldn't know your story. And if I don't care to look it up, or if I don't normally buy plastic water bottles. Like I avoid it at all costs because I think that, a lot of people have water, and if we can get it at home, we should. But, hearing about, what you're doing, well, people need water bottles at events that, they might not have water for everyone. So there is definitely a need for it. So I would then want to seek you out. But Jessica, how do you think about the companies that you invest in, and do they ever struggle to get the message out there so that people want to buy into it and consumers want to buy into it?
Yeah, I was just having that same thought process as well, because I was thinking like, yes, measuring, you can't like improve what you're not measuring. So of course, having numbers is better, but like you're not having that storytelling experience of like what this well actually like brings to people, and the financial solutions like there's definitely like a quantitative numbers, and then there's definitely like qualitative storytelling, and that definitely comes with like good marketing, good branding. And so definitely see a lot of things that I would like not recognize the value in at first glance, and including a plastic water bottle, to be honest. Like it's so we don't specialize in helping the storytelling and marketing, but we definitely could like help make those connections and just emphasize like, okay, like once we dig deeper, sometimes we see like what is really different about something, and like how they could tell the story better, which is often needed, but it's hard.
Yeah, and I think that it's sort of an endless struggle of how can we get people to trust us and get the word out there. Because everybody tries and everybody spends lots of money marketing and on search engine optimization, and there's a dozen ways, but at the end of the day, people might make decisions, in a store about a bottle of water based on what the logo looks like or which one's the cheapest. And so I think we are headed towards an economy where consumers are more conscious, but it's sort of in this transition period where only certain people sort of care about that. So it'll be interesting to see that kind of progress and that change. I do want to go over to this marketing problem to Josh, because Josh and I have talked one-on-one, and one of the problems that they've kind of struggled with is people don't believe them because they've been mistreated so poorly by payday loan places that people are like, no, of course they say that it'll be 10%, but when you miss a payment, it'll jump to 30%, and people are just not trusting. So Josh, tell us about how you guys are approaching that and the difficulty there.
So we obviously beta tested a lot of marketing, and we failed, in a lot of different ways to get our message out. And kind of like Jonathan was saying, when we put money in digital marketing dollars, people immediately lumped us into this predatory service because, everyone's trying to push a loan, as they say, loan shark is, favorite term, or you're a loan shark. And what we really had to get people to understand is that we empathize with their struggle. Since we empathize with their struggle, the product that we are going to provide for them is for their greater good. It's not to hurt them. It's not to harm them. And the best way that we knew how to do that was to stop pushing digital marketing dollars behind saying download. We started pushing digital marketing dollars behind a why video, right? If you're familiar with Simon Sinek, he has this glorious book, Start With Why. We have some great, peers back at home who really have, studied this type of marketing and why it's so important. And that's what we knew all along. We just didn't quite understand how to share that to the general public, right? So what we, started to realize is, hey, we really want this to be organic. So organic meaning, how can we help people spread this word of mouth? And we can't do that by sharing what we do or how we do it. We can only do that by sharing why we do it, right? Because if they can connect with why we do it, and that empathy now exists on both sides, you know, between possible consumer and organization, then the organic marketing will spread, you know, as it's supposed to. But if you can get them to understand the real powers of why, and it's genuine, then the conversion rate can really increase, you know, from the beginning, and the belief and trust with, you know, consumer and organization is now at an all-time high.
Yeah, I think that that's a good point. I think that this is also where kind of comparison videos and personal stories really go a long way. Like if somebody said, you know, I normally would get a loan and I would have to pay back X, and many times I ended up paying back, you know, 2X or 3X the value of the loan. But since I got to use the Halo app, I actually only ended up having to pay, you know, a total of 14% over the course of 3 months or 4 months. And
yeah,
it really did save me. And you know, it's almost like when people see that comparison, they understand the difference. And I think, like John, you know, it's, well, yeah, you could buy an Evian water bottle or a Smart Water, but you could also buy 1-for-1 water and know that A, the bottle's gonna, you know, it's biodegradable, and B, that we're gonna get water to somebody who doesn't have it. And so I think that, you know, it's an endless struggle of how do we get the word out there and how do we get people to trust us, but how do we know that that is really happening? And so I think that as a society and as consumers, we're very skeptical. You know, we were talking before the call about how this sort of sense of corporate social responsibility, does it really exist? And, you know, a lot of people think no, and a lot of large companies have kind of shown that they just want to virtue signal and talk about the issue and pretend to care, but very few are actually willing to do something. Mm-hmm. And so as entrepreneurs, it's this endless struggle of, well, how can I show the world, especially with consumer products, because I think a lot of impact is consumer products, which is how can I show the world and consumers that what I'm doing is actually making a difference? Does anybody have any kind of other thoughts on that? Any responses?
I just talking about Halo app. There's a lot of talk right now about, you know, helping underserved communities, and that is such a really cool, creative way to do that in a tangible way. That's a very cool concept. It's just a really great concept. I'm just very impressed. So.
Hey, thank you. You know, thank you. You know, kind of, you know, the stories that come out of this is what we try to share most often. You know, final thoughts would be customer testimonials are more powerful now more than ever. And typically customer testimonials are done, you know, through a Yelp review. You know, I used to work for Home Advisor, and that's what we did. We sold reviews, right? What we understood at the Halo app is that testimonial, like we need that. It improves the power of our community. So we, you know, partnered with a quick organization called Video Proof. It sends a link, and that link gives them the opportunity to give you a review via video, opposed to via this or via that. And then we just chop it up and we push that out, right? So the customer voice is more important in a social impact organization than your voice ever will be, right? Because the collaboration of the customer voice included with yours is what community is, right? Equals community, right? Mm-hmm. Is the power of the voice. So we really do our best job to help them understand that, hey, look, wherever you're at, if you're hurt right now, and, you know, because you were given a free resource, because the water bottle, you know, is gone in 4 years, right? Like, this is why I decide to hop on board. That will go so much further than you ever trying to explain why you're involved.
I was just going to say, I think that personal kind of impact is really, really valuable. I remember when I was 13 or 14, and, you know, my parents kind of really instilled this value of giving back. And one of their friends worked for Habitat for Humanity, and I gave him $60, like, which was a lot of money for a 13-year-old or 14-year-old. And he sent me a letter like a month later, and he's like, I gave $20 to these girls who couldn't afford to go to their middle school dance. And, like, he told me that he spent $20 to help this guy and, like, get a bike tire. And just, like, hearing those stories made me feel so good about the money I gave. And so whatever way you can tie that into what you're doing, you know, whether, John, it's like a QR code on the back of your water bottle that people can click and it brings them to a video of them getting the well and, you know, wherever. And then you could update it. So it's not just one video, but it's like, hey, this is what we did this past 2 weeks. And, or Josh, you know, like, I was able to fix my car, which helped me get to work, and I wouldn't have been able to do it otherwise. I think that those kinds of, you know, impact stories for the consumer go such a long way. But yeah, Jessica, John, your thoughts?
Yeah, I was about to say, the phase you guys are in as well, it's really exciting that you can really like get to know the customers and you can like rapidly innovate. So like corporations, like I think we all agree that we don't think that they really care that much. And you guys clearly do. You have the why, and you also have that deep like connection with like who you're helping. And yeah, you can rapidly innovate on that as well, being like lean and agile, like something like implementing that QR code or like.
No, I think that's a great idea. I've got a mock-up of the new label, and there's a QR.
Already thinking ahead. Awesome.
Well, that actually is set right now to take you to the website. The bottle is built so that you can see through it. I don't know if you can see, but there's a double-sided image on the bottle. So when you see it on the shelf, the idea is that the one for one, and then the image tells you the whole story at a glance. So that's how it was built. But I don't know. It's just really neat to see. You know, as a startup entrepreneur myself, knowing how hard it is to find funding and how hard it is to connect with a network and that type of thing, to understand that the impact investors are looking at it and measuring it and looking for stuff that not only has an opportunity to make money, but an opportunity to have a positive social and environmental impact is just really encouraging to me. So, you know, like we work with nonprofit organizations and we fund these projects through them. So we always have, like I said, we always try to give, we underpromise and overdeliver in the amount of water that we give. And then these nonprofits give us a layer of accountability. So that's the kind of thing that I've tried to build into this business, and it works the same way. They're part of our community, like Josh's community, where people can kind of feel a little bit of trust because of the fact that these are people that they know and you know, that we're all working together. So
yeah, and I think that's the perfect sort of segue, which is, I think a lot of investors historically have sort of seen impact companies as a worse investment. And I think that in the last 10 years, though, that has started to change. And I think that the returns on these companies is actually going to be better in the long run, because I think that as a society and as a consumer economy, we're changing. And I think people are being more conscious and they do want to know the impact they're having. And it's really sort of exciting to sort of see that. But Jessica, what have you noticed? Have you noticed more money going in? And like I saw that the impact investing is going to be $750 billion right now, and really grown tremendously. But what have you seen as someone who's kind of a little bit closer to the source?
Well, I think the impact investing in a few different ways. So I think there's definitely like ESG, like in public stocks, and that's sort of one way to think about it. So I'm not sure if that's part of the number that you quoted, but I think there's more and more investors that decide what kind of impact that they want to make. And you see like lots of new funds that focus really like have a very specific investment thesis. So whether it's Backstage Capital that wants to invest in people of color, and then there's a lot that are really on the environmental side, and there's a lot that are on like supporting local economies. So I think like even though the size of the funds really varies fund by fund, like that didn't these type of funds didn't really exist like 10 years ago.
My understanding too is that people are sort of starting to view it not as a worse investment. They're seeing it as, this is a company that can make money that is also doing good. And I think that there are lots of places in the economy that exists. And I think the perfect example is Josh with the Halo app, which is there exists a need for short-term loans, and nobody's denying that. And we do need them. And the question is sort of, well, if people are being really predatory and have this almost monopoly because, you know, this is all people think, or there's sort of collusion in terms of the interest rate they set, you know, how can we sort of undercut that and not only make money, but do good as well, because we're now, you know, not charging as much and people aren't wasting money. They're actually getting a fair rate and getting a fair deal. And I think, John, you know, you've built out a product and a company that is also competitive with other, you know, products out there. So I definitely think that there is space, and you know, sometimes it's at a small hit to profit for sure. Like Josh, you guys could be charging ridiculous interest rates, and John, you could be either charging more money or not really donating and pretending to donate, or, you know, not really giving back that much. But we're doing it because we care about what we're doing, and we're really passionate about that. And just from like an investor standpoint, it's awesome to see, you know, that, you know, you guys care about what you're working on, and this is very core to who you are, because it means that you're not just doing it to make a quick buck and get out. It means that you're really dedicated to that.
Yeah, I mean, you know, based off what you said, you know, you mentioned that investors assume that possibly by investing in impact that they're going to make less money. And, you know, impact to me equals savings, right? So whether we're saving the environment, whether we're saving them money, whether we're saving them time, somebody has to absorb that, right? So as an investor, if you want to invest in impact, you have to be okay with possibly absorbing those few points, right? Also, what we really try to do is we wanted to create a new type of investor, and that's what impacting investing is, right? A new type of investor, these investors that are just entering the market over the course of the last 10 years. And what we want to do at the Halo app is prove that it is lucrative, if not more lucrative than maybe perhaps traditional investing like the stock market, right? If you can bring your money to the Halo app and invest in people, it's real lives with real problems that you're helping solve, and the paybacks are similar or better, then why wouldn't you invest here instead, right? So when we look at financial equality as a whole, that's part of the problem and part of the story that we're trying to tell, right? Like, we're trying to solve that these people aren't nearly as risky. You can make as much money off them, right? And still give them a fair shot and include them in everything. But also, if it's more lucrative, then maybe you should move all your dollars here.
I think that thinking both holistically and long term, the way you guys are, will eventually mean that, like, on the whole, everything will be more complementary. So not having as many like negative externalities by thinking like, how is this having a positive impact? And also on the other side, avoiding the negative consequences that has historically been hurting, and some sort of trade-off that companies are making, especially the big corporations. Like, that's why we need entrepreneurs like you guys are talking about, and to think about the whole picture and how to make the positive impact. And I think like in the long term, that'll be like the new normal, and it won't be less profitable than somebody who's creating a lot of negative externalities.
Well, the way that a lot of big corporations seem to operate is that the CEO is just driven to give dividends to the shareholders, and they're doing that at any cost, and that's their job, and that's why they get the salaries that they get, and that's what the expectation of the shareholders is. And this whole shift, the fact that there are funds that exist today that didn't exist 10 years ago, is a really positive signal about a shift in the way our country looks at things, the shift in the way people look at things. And that to me is the coolest part of the whole thing, is that, you know, as people become more aware, and as there are more options available for people, you know, they're you know, if they have the option of being able to make a choice that is something that's going to have a positive impact on the community or the environment, you know, what is it, like 84% of people would make that choice if there was a choice available to them. There was a study that said that. And I don't think people, like, my business is a for-profit business that is built to be a revenue generating machine for nonprofits. That's what my business is built to be. And like the stuff that Josh's business is going to be able to do is putting that money back into that community and changing the economy of that community, because now those people have more money to spend on their families, and that's going to drive the economy. So
hopefully on your water, John.
Right. But I'm really, to me, it's just a really cool time, because it's starting to catch on. People are starting to embrace this concept of, you know, voting with your wallet when it comes to what kind of corporation are you going to support.
Yeah, I agree. And I think that we're really at this inflection point. I think we'll look back at this in 10 years and be like, you guys were the pioneers in really changing an industry and making startups and companies that are driven by, you know, helping people. And that's what you guys care about. Thanks so much for all of you guys being here. We really appreciate the time. I think that this has yielded an interesting conversation about sort of impact investing and sort of the nature of the industry. And I think and hope, as we're saying, that people are really going to start to change and be voting with their wallets a lot more. And I hope that, you guys' product get out there. And Jess, I hope that your companies do well. And I really do think that we're kind of, like John's saying, at this new point. But thanks for joining us, and thanks for being here. Thanks, guys.
Thanks for having me.
Thank you, guys.